I started trading crypto in 2023 and by 2025 I reached financial freedom. Now I'm on a mission to share proven strategies that lead to real financial freedom. No hype, just results. What's good, y'all? JC here. So if you've been trading off my outlook, I believe you're sitting in pretty good profit right now. Personally, my trades have been hitting well lately and that feels really good. And glad it could provide value to you guys too. Yeah, in my most recent video, I pointed out that to really understand the flow of this entire crypto market right now, the chart to focus on is Ethereum. This is the Ethereum daily chart. And then I said Ethereum's uptrend hasn't broken yet, and the best long entry would come when the price comes back to retest this trend line. And since this was a key setup, let's do a quick recap of the last video. Ethereum, on the other hand, hasn't even touched its leg line. In fact, it hasn't even broken its uptrend line yet. And that's why even if this uptrend eventually breaks and the market rolls into a full downtrend, I believe the market makers will still push price up first to absorb liquidity above. So on the Ethereum daily log chart, draw the uptrend line from the 2100 low back in June. You'll see that the retest zone around this trend line has been a solid long entry. So that makes my first entry plan simple. So when Ethereum comes into the trend line area, I'll enter. And I took partial profits around 4,500 to 4,600, and I shared that update on the YouTube community post. Any position I take based on the outlook I shared in these videos gets posted right away, either here in the video or on the community page. So if you're subscribed with notifications on, you'll be able to catch it in real time. And like I said, of course, Ethereum's chart is the key right now, but that doesn't mean that Bitcoin should be ignored. Bitcoin still is the backbone of the market. It's just that the market makers have the wheel on ETH for the moment. And that's why today I want to share something quick and simple that I've spotted on the Bitcoin chart. A pure candlestick-based technical setup. And just to be clear, this breakdown leaves out the macro and psychology. It's strictly chart and candle analysis. Now looking at the Bitcoin daily chart here, you can see the supply box zone formed at the top. So price has broken below the lower edge of the box, but if it recovers back inside, that move would count this as a fake out, and from there, a push towards the top of the channel is back on the table. And in the previous range, from near the highs, we also saw a box range. And price broke down out of the box, but quickly snapped back inside, confirming this fake out and driving a move all the way back to the channel top and even further. And that said, just because we saw a fake out and recovery in the last range, it doesn't mean that we should assume the same thing will happen here. It could be another fake out and a reclaim, or it could roll over into a leg down. This chart alone doesn't give the answer. For example, if you look back at the Bitcoin chart in November 2021, you'll see a box forming from the highs. The price broke down below the lower edge and faked it like it was coming back in, shaking traders up and down, but in the end, it rolled over into a bigger drop. So then what's the key to watch in a setup like this? The monthly close candle gives the clue. When a green monthly candle is followed by a red one, and the upper wick of that red candle takes out the wick of the previous green, then closes as a full red, backtesting shows there's a high probability of a move down, whether small or large. And to show you a few examples, in July 2023 on the monthly chart, the upper wick of that red candle took out the wick of the previous green candle, then closed red. And what followed after was a drop. Not a crash, but still a move down first. Same thing in August 2022. After a green candle, the red candle's wick pushed higher than the previous green one and then closed red in the end. And again, what came next was a decline. Take a look at the double top monthly candles in 2021. In both cases, the red candle's wick ran above the prior green, then closed red. And what followed each time? A drop. And keeping all that in mind, let's bring back to the current chart. So we've got about 3 days left until the monthly candle closes, and the open of this candle, the August candle, is sitting at 115.7k. So if this monthly candle closes red, so stays red until the end of the month in terms of price, so below 115.7k, there could be more downside pressure. But if it closes green, so price above 115.7k, then the bullish trend is still alive and the new leg higher is on the table. And a green close above 115.7k would also mean that this supply box zone can be read as a fake out, with price reclaiming the box from the inside. So the key now is whether this monthly candle closes bullish or bearish, green or red. So yeah, today I kept it simple. No macro talk, no market psychology, just pure technical analysis on the charts that you can take and use for your own trading perspective. And so if you found value in this video, hit the subscribe and like button. It goes a long way in keeping this channel strong. Thank you, and I'll catch you in the next one.